Good morning, good afternoon, good evening, wherever you are, whenever you are. I'm Foreman. Today I'm going to be talking about the UK stocks I bought this week in the stock markets, as well as how I've done and my conviction and whether I should be buying or selling another one of my stocks. And if you like the video, please drop one of these. That was terrible. Drop one of these to help beat that YouTube algorithm. According to Google Finance, the FTSE 100 is down 1.63%. The FTSE 250 is down 1.80%, and the S&P 500 is down 1.78%. Interestingly, my portfolio is supposedly down by 0.79%. However, this is due to an error with my stockbroker Freetrade. The issue is here that the total overall value of the portfolio is artificially inflated because they've not taken into account the uncrossed trade of Argo blockchain, or at least the finalized uncrossed trade. This is because it says on the Freetrade app the Argo blockchain is currently worth or traded at £1.40 odd. They closed much lower than that. In fact, it was around about £1.30 odd. I believe there was a 10 pence difference. This 10 pence difference reflecting, well, 3,600 odd shares is going to make a large difference in the total value of my portfolio. So whilst on percentages and the total value, I'm down less than the markets and thus I've outperformed. Realistically, I have definitely underperformed the markets this week, and my portfolio really should be down around £500 from this current level. For those of you that don't know, an uncrossed trade is something that happens at the end of each trading day in the markets, where the bids and also the offers, I think I've done that wrong, the bids and the sale prices are going to be linked together and then it finds a medium value. I believe that's the case. And so with Argo blockchain, since there is a lot of liquidity, a lot of people buying and selling, also the dual listing in the US, the price can change quite dramatically. The top riser in the portfolio this week was the likes of Team 17, which may be a bit of a surprise as they have been underperforming for quite some time now. Shares are up 4.48%, and in fact it's the only stock that is up in my portfolio this week. This may be because they have made some announcements. Not only have they had a Switch sale, Nintendo Switch, a very popular handheld console device, it might also be due to the fact that they've announced a few games. None of these games are that particularly big to me, although one of note that I would be interested in is a game called Hell Let Loose. This is a 50v50 strategic multiplayer game focusing on more of a wartime battle, and I think that would be quite interesting to play. It's going to be released on consoles, and this is a big market, and so they could see quite a lot of sales driven through it. However, realistically, not every price change in the market is depicted by news or relevant fundamentals, and at the moment, who knows what may be going on. When we compare it to one of their competitors, FDev or Frontier Developments, they create the likes of Elite Dangerous, we can see that there is a bit of a disparity. They are only up around 1%, whereas Team 17 is up around 4.5%. So we can see that it's not just an industry-wide thing, and so I truly do not know the answer to this. Regardless, my position size stays the same. I'm confident on the long-term outlook of Team 17. As I've said before, they've got the potential for family fun. This could transition into a sort of esports scene with some of their games like the likes of Worms, and their catalogue continues to ever expand in this indie level of type of game. And the reason why this is advantageous is because these have lower budgets. These lower budgets have proven to be just as popular as some of the AAA game, and they can generate just as much profits. For instance, you could look at some of the more popular games in the last year, and you may have noticed that some of them had extremely low budgets. Look at Among Us, look at the likes of, what was that? Fall Guys, that was it. These games seem to become spontaneously popular out of nowhere. With the amount of games that Team 17 launches, there's certainly a chance for them to get one. It's much like a viral video, one that I've not had on YouTube just yet. Frontier Developments is an interesting one too. They are on my watch list and they're very close to my target price, and so I may be interested in purchasing some shares of this stock, although their revenue and earnings have been very shaky over the last few years, whereas it would sometimes be amazing and sometimes not quite so. This could be due to late reportings or delayed earnings, although I'm not entirely sure and we'll need to do more research on the matter. If you sign up to my stockbroker Freetrade, which is on the side of the screen, you can get a free share worth up to £200, and the minimum at the moment is £10 per share before the end of the month. So if you'd like to sign up and get a free share at least £10, then click my link in the description down below. The top faller in the portfolio this week, unsurprisingly, is the likes of Argo blockchain or ARB. Shares are down 11.15%. And in fact, due to this dip, I decided that it was worthwhile buying more. This is because I remain bullish on the company. They've got that potential NASDAQ listing, which I'm getting a little bit impatient over, and hopefully that uplisting will happen sooner rather than later. They've also got the likes of the Texas facility with the 800 megawatt capacity and the chance to have some of the cheapest electricity rates in the world, only reinforcing their monthly mining margins, as well as mining difficulty for the likes of Bitcoin decreasing due to the crackdowns in China. It seems like there is a lot fueling this company for growth in the medium to longer term. I've decided that I'm going to top up the position. I bought an additional 93 shares, slightly lowered my average price, although I'm going to try and be sensible here. I've said this in the past. I have now got a considerable position relative to the portfolio. I need to make a decision. Should I now be stopping buying more? Should I just leave it there? Or should I continue to average down, take advantage of this dip, because this dip could last at least a year, take advantage of that for the longer term so that over that next 5-10 years, my portfolio may benefit greater? Or right now is what I need diversification? I think this question comes down to my own personal conviction. I'm very much bullish on the likes of Argo blockchain, but am I bullish on the adoption of Bitcoin and how that may do in the future? I'm still not entirely convinced. I do think it's quite a promising currency, and we can definitely see some adoption of it, especially in countries where governments are perhaps more sketchy, to say the least, and it becomes more difficult to store your wealth if there is the likes of hyperinflation ongoing, and so you would want to store in a digital asset. Although in the likes of these more first world, very well developed countries like the UK, for instance, it may seem a lot more difficult to be adopted. And you've also got the likes of the Bank of England saying that it's not going to be without regulation, so perhaps we'll have to see in the future. However, I do believe that I need to have some exposure to the likes of Bitcoin, because after all, diversification is protection against ignorance, and right now I'm likely being ignorant. However, diversification is not a large portion of the portfolio, and so that brings me to my own personal confliction of whether buying more, lowering my average so that I have potentially better returns in the future, or mitigating risk, stopping from buying more and then letting that hold for the longer term. I'm not entirely sure, and so I would love to hear your opinions on the matter. But I do like to see that Bitcoin is now looking to stabilize. Sure, in the last 5 days, it's down about 9%. However, what is interesting about it is that it's fluctuating between a certain price range. Whilst this is, meaningless to me, I do think this can be a good indicator. This indicates that it does have value. If this was an asset with absolutely zero value, then perhaps we would have seen it decrease a lot further with much more volatility. Whereas in the last month, it has been trading sideways, and this could be a good time where Bitcoin cools off before it may increase once more. I spoke about Boohoo in the last video, and if you've not seen that, I'm going to put a card at the top right of the video why I'm all in. And I had a regular viewer comment on the video. They asked, well, you've detailed the returns policy and how it was easy to do. What about the refund policy? Why didn't you mention that? And this is a very good point. I didn't mention the refund policy last week because I'm still ongoing in the middle of the refund. I had only put the parcel or sent it back using in-store courier something. I've lost that. And basically it will take a few days. It's likely not even arrived, or it's still likely in transit. I did this on Wednesday, so it's going to take a few more days to see how this refund is ongoing. But in that period, I have bought more. As you can see, I'm wearing a Boohoo shirt, or at least Boohoo Man, because sometimes I do forget. It's handy to know that it says man, because if I do forget and look in the mirror and see my long hair and think, oh, I'm not male, it's right there for me. Regardless, let's get this bad humor out of the way. I am actually a fan of the products. White is not my color, but I do like the comfort, I like the quality, and I think the cost to quality ratio is one that I'm very much a fan of, especially if we may see in a recession following the likes of this pandemic, where perhaps we exhaust all of our savings and we may find it may be a struggling time to find jobs, then people are going to be more budget conscious. We all need clothing, and so clothing could be more of a higher priority than other discretionary spending. At that point, I think the likes of Boohoo is well positioned, much like Primark, and I think Boohoo has the advantage of the online sales, and I would argue that Boohoo's products, even though they are probably a little bit more expensive in some cases, are certainly of a much higher quality, and I think there is a good value in the blend. At the moment though, the shares are currently down for the week by 1.97%, although this is different between sources, and so I'm not too sure. Their results were good. I'm very much happy with them, although apparently it's not motivating investors. This is fine by me because if shares do continue to downtrend, then I'm very likely going to top up on the position, as I am very bullish on their medium to long-term outlook. One to mention is Ashtead Group. They've fallen by around 0.99% this week, and they also had their results on the 15th of June. What had happened is that they've done pretty darn well. This is because they've had another year of record free cash flow. It's around about £1.3 billion compared to around £792 million in 2020. Not to mention they've also increased their revenue by 3%. However, I now look at the company, I look at their guidance. They're stating around, and it's less than 10% for the UK, US, and rest of the world, I believe. They're saying, well, yeah, the guidance is going to be less than 10%. Is this really a high growth company that I need in my portfolio? Sure, they predict the revenue growth in Canada to be around 25%, but realistically, how much am I going to gain from this? The results are actually going to be presented in dollars, and so actually due to the weakening of the dollar, the overall pound revenue has decreased. It does make a lot of sense to the company as a majority of their money is made in the US. And now it's a case of whether I should really continue to hold, as they are a good company and they've managed to decrease their debt by £1 billion in the last year and lower their leverage multiple. Or should I just sell out and reinvest the cash elsewhere? I had a very valid comment stating that I need to have conviction. This is someone that would said they personally had mentioned that they would trim 30% of the position, have that as a cash position on the side to take advantage of any dips. I think these are very wise words, and when I look at it, I think at this current valuation of around about £50 per share, if I had this money outside of Ashtead Group, would I buy these shares? And the answer is probably not. They don't have the qualities that I look for in companies anymore. Whilst yes, they are a good quality company, they're in a good industry with long-term growth potential, combined with their guidance that is gloomier, but not gloomy for a company of that size, I feel that it's perhaps not worth it. I should be looking for smaller companies with more growth potential and use my own advantage of time to invest in these companies that perhaps are less researched. And so it's very likely that I'm going to be tempted to either trim profits, increase the stop loss, I'm more likely to be stopped out, or sell the position and hold cash. I'm tempted to reinvest it elsewhere, but I think for once it might be worthwhile that I hold some of it as a cash position in my portfolio to then take advantage of any incoming dips. What I would like to ask you is, would you buy Ashtead at this current valuation? And we've also got the likes of Games Workshop decreasing by 2.61%. They're fluctuating up and down. This is how shares go. There is no real news on this, and I'm still very much bullish on this company, although I've remained quite quiet as of recently, as my attention has been elsewhere, with the likes of Argo Blockchain, Team 17, Boohoo, and even Ashtead Group. If you're interested in how many shares of a stock to get £100 a month in dividend income, then click the card at the top right of the video. Thank you for watching. I'm Foreman. Have a fantastic day.